Things I'm watching, I told you momentum signals had turned back to bullish. Previously, we started seeing that in late April when we bottomed out. Talked about it. As we went off the lows, we saw more and more momentum signals turn bullish. Then we got our back-to-back bullish candlesticks. I talked about that last Wednesday and Thursday, and I told you that watching the swing trend signals to see what becomes of them. Well, right now they're mixed. We're getting mixed signals. Like right here, look at this. We turned bullish today here, but we're still in the negative territory. Here, we're seeing momentum turn up. The trend, we're above that line, but the momentum is still below the trend line. They don't have a bullish cross, and we're still in negative territory. So again, is it something like what we had over here where we saw these same things form, but the rally failed and we ended up still moving in a negative, going down to new lows and remaining in negative territory here with momentum. So again, you had some bullish signals there, but they were followed by bearish signals, so they were to be ignored until we saw momentum turn back into positive territory, which we did do right here with this move, which was confirmed right there with momentum turning above the trend. So here still could be nothing more than a counter trend, as I've talked about. Again, are we going to firm a bottom here and see everything begin to turn back to bullish? Just nothing more than a counter trend. Rainbow cloud, the rainbow trend is still bearish. We've come right up to this level. Now we start clearing this level. We start, the rainbow momentum turn back to bullish, then establish a bottom. But right now you don't have that. There are still mixed swing trend signals. Same thing here. Signal not back to bullish yet. No buy signal. So again, this still could be a counter trend. Over here, we got these rallies. And again, it didn't change the sell signal. We got a series of lower highs. It ended up being a counter trend. Momentum turned briefly positive, but reverted right back into the negative territory. We're positive here. I'm watching to see, will the rally fail? The 78.6 Fibonacci are surrounding that level with our gap on the S&P at 5,200. Still have a possible bear flag on the S&P 500, and again, a lot of signals are still bearish. Right here, I still see red here that is declining. We still have a potential bear flag in play, still on a sell signal here on the S&P 500. Now again, S&P's got some green going on right here. We had green going on over here, but it ended up failing. It ended up moving to new lows. And again, momentum's positive. We got green going on. But if we start losing 5,100 area, then again, we could revert back to red. We could see the gaps that we've recently had attempt to be filled. If we revert back to red, then again, it could be something like this. Possibly a bigger trending move, but we'll be watching. As what I'm looking for is to see if the test of the 20-week will establish a bottom. Maybe takes the S&P to new highs. We still have the 10 and 20 below the 50 period, so again, we're likely going to go back down and attempt to fill these gaps. See what happens. Does that low hold or not? And if it doesn't, then you have a lower high and a lower low. Critical Mass Cloud 2.0 still has a bearish signal, but we're right at the upper boundary of the cloud. Could get rejection here. This is where we had rejection over here, where the signals still remain bearish after the July peak. Again, their swing trend signals that I have turned bullish. The original Critical Mass Cloud, it did turn bullish. The Critical Mass Cloud 2.0 did not. So again, will we revert to bearish momentum and start moving back to fill the gaps? We're right at this area of resistance. This is the upper boundary of the cloud, and this is where we turn down this area over here and also over here. And then again, then the moment of truth. Do we come back, and does this low hold? Does the trend line hold? And do we establish a bottom? We break the trend line and take that low out. All about support and resistance. But signals are still bearish with this rally. I talked about it last Wednesday and Thursday. I expected a rally higher, just the 200 on the 60-minute chart, and if we got above those levels to try to fill the gap. Cleared the trend line on the 60-minute chart. We're now filling the gap, so we'll see what happens. Please support the channel with the link directly below. That allows me to be able to provide you this information If you like the indicators, you like the charts, let me know that by supporting the channel. Take a moment to do that. I would really, really appreciate it. I don't have any sponsors. I turned them all down. I don't want to sell you a bunch of stuff. I just ask that you help out and support the channel. If you can consider doing that right now, I would really, really appreciate it. I thank you for your consideration for that. Now, here, when we're rising, when the S&P is rising, this black line has acted as support. And when we turn down, it acts as resistance. In an uptrend, the blue line tends to act as the first level of support. Okay, and when we violate that level, then the black line comes into play. But the blue line tends to act as support in an uptrend. And this is a secondary level of support. When we break the blue line and we break the black line, then the black line tends to act as resistance. And when you get above it, the blue line is the secondary line that acts as the secondary resistance if you clear the black line in a downtrend. Here we got rejection at it. Here we move just above it, and the blue line acted as resistance. So here we've broken the black line, and we've come back up. We stalled just under the black line, pulled back, and stalled again, and then now we got it back above it over the last 3 days. Do we have something right here where we're going to stall right in this area, maybe a little higher, maybe right here at this area right now that we hit yesterday's high and today's lower high? Again, our session being flat today, a little bit higher yesterday, but do we get rejection like we did over here and over here at the little blue line? So again, in a downtrend, it acts as resistance. We start clearing that level, not dropping back below the black line, then that's bullish. That would be bullish. And you get above this level, and you hold above the black line, you don't fill those gaps. Everything turns back to bullish. Happy days are here again. They bring out the party hats and the confetti over there at CNBC. A rejection at this blue line, and you drop back below the black line to fill the gaps. And then you come back to this trend line, and you can't. Back above the black line, and you break this trend line, then that's going to be bearish. You can get above these levels, you hold above the black line, you get above the blue line, then that's bullish. But again, the blue line in a downtrend tends to act as resistance, and that's where we're at right now. The black line tends to act as support, as a secondary level of support when we break the blue line in an uptrend. The blue line is resistance in a downtrend as a secondary level of resistance, and that's where we're at right now. So again, you lose the black line, you start dropping back down, fill these gaps, that can lead to a reversal. This has been a consistent pattern for years, since the January 2022 top, even before that, the run-up in 2021, the peak in 2020, the same thing has applied. When we get above this level, resume the advance, or in the downtrend, you get a larger counter trend, changes the short-term trend. Some of the bigger moves we had in 2022, like the run-up in August. We get rejection here, which we did do after the August peak in 2022. We got rejection at these levels, and we got a bigger drop. So the moment of truth. Swing trend signals that are bullish. The question is that a new bullish phase, or is it nothing more than a counter trend? So again, the swing trend signals are mixed. Momentum signals are still positive. Momentum flips back to bearish. Then again, a lot of these signals can fail. We're looking for clues. That we fill the gap, we'll be watching to see what happens from here. Do we validate a bottom, pull back, validate a bottom, or do signals all revert back to bearish and we resume the decline? So again, swing trend signals are mixed. Here, still have a bearish signal. This is a level where we stalled out previously after we peaked in July with the counter trend rally. If we're going to go higher, we need to see everything turn back to bullish, and right now you got a mixed bag. Because we sold off, and then we rebounded back up, and we're kind of going in a trading range sideways. Some signals remain on sell. Other signals have turned back to bullish. The signals are mixed. Another bearish signal. Again, some of the signals have turned bullish. Can they remain that way? The swing trend line is bullish. Can it remain that way? It turned bullish over here, but it couldn't remain that way, and it turned back to bearish. Momentum turned right back into the negative region. Momentum's currently positive, and it remained that way. If we turn down and we start dropping below the 50-day moving average in the daily time frame, 100 in the 60-minute time frame, going to pull back and fill those gaps. We'll be watching to see if this is a counter trend or does it establish a bottom. Critical mass line flatlined. It was blue, dropped below it, it turned to red, and then here we're flatlined. It's going sideways. It turned back to blue now. Start dropping back down to fill the gaps, lose that level, hold below it. That's going to be bearish over here. After the July peak again, it did the same thing. It kind of went flatline. We got above it. We lost that level, and the decline resumed and went right back to red. So again, until we bottomed out, we got above the critical mass line and it acted as support. At blue consistently all the way up. Is this something like what we had over here, or do we try to establish a bottom? I'll be watching lose the critical mass line here. And again, if we start dropping below the 5100 area, back to fill the gaps, a lot of signals could start turning back to bearish. We'll be watching to see what happens. Again, the last 2 days I've been trying to show you some of my different trading models. Some of them are bullish, some of them are bearish. Here, momentum is still bearish, and the trend is still bearish, and we've slammed right up into resistance. When we had the counter trends after the July high, that's exactly where we halted the advance, right there and right there. And then we turned down. So here, signals remain bearish. Some signals are bullish, some signals are bearish. I'm taking the time to show you, and it really going to turn off that 78.6 Fibonacci and the gap fill area on the S&P. Again, my critical mass cloud 2.0, it's still bearish. My original critical mass cloud here is bullish. Again, they're back and forth. So again, is this a counter trend? Over here, no buy signal was triggered until down here, but there are other places where we have had counter trends where buy signals were triggered, but then it ended up failing. So again, is this a counter trend? And we're going to go down and take out the slow, or again, are we establishing a bottom? And that's what we're going to be watching with the next sell-off. The next sell-off is going to give us some very important information. I'm trying to show you some of my different swing trend signals the last couple days, different ones because they are mixed. The stock market was mixed today. The Dow was up slightly, up 0.44%, up about 39 points. S&P was flat. The NASDAQ was down 0.18%. The Russell was down just under 0.5%. VIX declined down to 13, down about 1.74%, moving towards the trend line of support. We've already had the 10-year Treasury note yield move to the trend line of support and bounce, getting a bottoming tail and a hammer. Here's the 10-year Treasury note yield. We are at 0.65% today. I told you again, this could be a warning sign that the rally is coming to a conclusion or bouncing off the trend line because it has a negative correlation with the market. And if it starts bouncing off of this trend line, that could put pressure on the market to the downside. When it began to rise here off of the 50 and the 200, we saw the S&P drop. The S&P rebounded after the 10-year dropped. It rebounded back up here and has now filled the gap at 5,200, hitting our 78.6 Fibonacci yesterday. We have the 10-year hitting the trend line and bouncing with the hammer. Now we have the VIX moving back to the trend line. Again, this is including the shadows here. My trend line moved on me just a little bit. If we include the shadows, it's directly overhead. If I exclude this one shadow but touch the others, we're hitting it right now. So again, going to be watching this area. VIX is forming another bullish falling wedge right into that level. So again, if we start seeing the wedge break out, volatility can return and rejection surrounding this area. Again, watching the 50 period, we got back above the 50 period. We drop back below it. We'll establish a lower high. We remain back below the 50 period moving average. Meanwhile, we've become oversold again on the stochastic. We hit the 20-week moving average just over 2 weeks ago. I told you we were hitting these levels of resistance for this weekly bar. That was the final day. So it was, again, about 2.5 weeks ago. Friday, it'll be 3 weeks that we hit that level. 4 bars because we hit it the last day of that week right there. But again, I told you we could rally off that 20-week moving average, and then we'll be watching to see what happens. Come back up to fill the gap at 5,200 now. We filled the gap yesterday with the doji. Today we gapped down, and then we moved back up right at that level, and again closed flat. We closed down by 0.03%. So, I mean, we were at a close at the same levels where we were at yesterday. Last Wednesday and Thursday, I talked about the bullish candlesticks that were forming. I told you I still expected a rally to higher levels, hit under the upper boundary of potential bear flag, or if we cleared that level to go back and try to fill the gap at 51.99. Cleared the upper boundary on the 60-minute chart, and now then we've come up and hit this level. So we'll be watching it. Those candles, it's the bigger rally, but have some gaps to be paying attention to. If we begin to turn back down, we're watching to see if the trend line holds, if the gaps are filled. Does the trend line hold? Take it out. Does the support zone, the support zone at these lows down over here, does that hold? We've talked about this. Here we have the 10 back above the 20, but the 10 and 20 are still below the 50-period moving average. I'll be watching the moving averages to see if they stay below the 50 period, and if price drops back below it, does it stay below the 50 period, marking this as a counter trend rally, and we get a trend extension down, or do we try to form a post-Fed bottom? As I've said, was the Fed meeting down here. Again, I told you we could form a bottoming process surrounding the Fed. More work to be done. If that's going to be the case, we have to see everything turn back to bullish, get the 10 and 20 back above the 50, everything in a bullish arrangement, and that's not the case right now. This is suggesting that we're going to come back and fill the gaps, test the moving averages and the trend line in all likelihood, and then the question is going to be whether these levels hold or whether they break as support. As I said yesterday, we got a doji. Again, it could be that we go a little higher and then turn. If we try to form a divergence on the 60-minute chart, then that could be the case. Watching is going to establish a bottom and validate this as a low, or if we're going to have a counter trend here and resume the decline, which is possible if we establish a lower high and then begin to turn back down below these support levels like the moving averages and the trend line and so forth. But we did come up and we hit our gap fill area. We hit our 78.6 Fibonacci over here, and again 78.6 Fibonacci from this decline right here. So we're watching to see if sellers push this back down. If so, do we resume the decline, carve out a bottom, eventually make our way and try to make new highs in the weekly time frame should the 20-week moving average hold, which I talked about in great length and detail earlier this week. I think with the NASDAQ, it hit the 78.6 Fibonacci. The gap fills up here. We may not fill that gap or may fill it at a later date, but right now we're turning down off of the 78.6 Fibonacci so far. We tested it, got a lower high today, just like the S&P. Again, if we end up losing these 50-period moving averages, you've got the 10 and 20 down here below the 50 in a bearish arrangement, still below the 50, but the 10 is above the 20. Do those moving averages stay below the 50? The 50 peaked over here and it started to turn down, and now it's kind of flattening out. We lose the 50. Does 50 start declining and start rolling down over? And the question is, what happens? Again, we got those same candlesticks, the inverted hammer and the hammer candlestick, back-to-back bullish candlesticks. I talked about that at the time last week. Told you I expected a bigger rally. Rallied up the next day to the 50-period moving averages, and I told you the 50-period in the daily time frame and the 10-week, if those acted as resistance, we could turn down. Got above them. I talked about the 78.6 Fibonacci. We got above them. Golden pocket here between the 61.8 Fib and the 78.6 Fibonacci. This area is called the golden pocket in technical analysis. So again, we're there. We overthrew the 78.6 Fibonacci, and now we turn down and we gap down and we pound it back up to fill the gap. So now I'm going to be watching what happens here. Does NASDAQ make an attempt to go back and try to fill the gap? go higher, or does it turn down off of our 78.6 Fibonacci? You got Fed officials now out there saying this weekend, we got Fed speakers, but you've got some Fed officials out there saying we may not get a rate cut in 2024. It had priced in 7 rate cuts before it had started to correct. The betting markets have been pricing in 1 or none at this point, had already readjusted. Something we're paying attention to as the 10-year yield is bouncing off the trend line, getting a hammer. Watching becomes of that bounce on the 10-year yield, and the dollar is showing signs of strength off of the moving averages as well. Both of them broke downward trends, as I've talked about. Both of them broke above overhead resistance, and now the 10-year has come back to the important trend line of support of the channel. Last time we bounced off of the channel, here it is one more time. The last time we bounced off the channel here, this trend line right here connecting these 2 points, last time we bounced off of it, we got that sell-off. So again, do we get it here again? And right when the bounce started taking place is right when the S&P peaked. Sometimes they peak and bottom simultaneously. Other times the 10-year yield will bottom out before the S&P tops out. But sometimes they do it together. They did it together there. So just something worth paying attention to. We got the hammer now. It's being confirmed. Get a follow through, then that could impact the stock market. But we have to see the S&P back below the 50-period moving average in the daily time frame to see any kind of sell-off. Today we had a gap lower, and then we went back and filled the gap, and we closed flat. So again, we could still form a divergence, as I talked about yesterday. If we've established a lower high, again, could see yourself if we take out the 200-day on the 5-minute chart. We bounced off of it today twice. Possible triangle here. Triangles can be continuation or reversal patterns, either one. So if we try to get one more push higher, then I'd be looking for a move into that trend line right there, and then a downturn, and that would form a divergence. Now the Dow has already done so. While the S&P was flat and the NASDAQ was down, the Dow was up. And you had a mixed bag. We're in earnings season. So if the S&P does turn back up, then I'd be looking at this trend line right here, this area, overthrowing the gap fill. We did it. We went up to the gap fill just by a fraction there, 51.99, and we moved just above that to hit the 5200 area, and then we turned. Watching to see what happens. Do we get this, or do we start breaking down and losing that 200 period on the 5-minute chart? And if so, then we start making our way back towards the moving averages. 50 is just below the 200, and again, probably going to get a bullish cross. When they crisscross back and forth, it's showing we're kind of in a trading range. If we pull back again, establish this as a bottom, get a post-Fed bottoming process here, or do we get a continuation of the trend with a potential bear flag? We did move above this trend line. When I did my weekend video, and late last week I was talking about a move with the candlesticks down over here on Wednesday and Thursday. I told you I was looking for a move to at least this trend line right here, and we never did reach the 200. So I was looking for the 200 test in this trend line. I told you if we get above that, then you have the trend line right here, and you've got your gap fill up here and our 78.6 Fibonacci. I talked about all of that last week and again over the weekend. Then we gapped higher on Monday and exceeded that trend line. And so again, making our move now towards filling the gap and towards the 78.6 Fibonacci, which we tagged and we turned down off of so far. So we've got a triangle now. We've got a rising wedge. It broke down, and now you've got this triangle. And again, the triangle can break down or it can break up. They can do either one, continuation or reversal pattern. P is still stowing at that upper cloud there, our trending cloud. And again, if we end up dropping and taking out the 50, got to drop back below the cloud, which we found support at the cloud here and just above our 100 period moving average. You get a bigger drop again, our 38.2 Fibonacci down here, 48.22 rounding up. 50% retracement is at the 200 period here at 46.84, and then our 61.8 Fibonacci down here, 45.47, and again the 78.6 Fibonacci likely coming in near, I don't have it on this program here, but likely coming in near our 400 period moving average. Again, these are the Fibonacci's of this entire advance. Watching to see, do we get a lower high and then a lower low and start coming back down and taking out this lower here? And if you do, then these Fibonacci numbers come into play. MACD turned up. It's in positive territory, but like I said, again, during the decline after the July peak, again, the MACD go negative, and then it turned back up, went positive briefly, but it was only a counter trend. We even overthrew the cloud a little bit, but when we dropped back below the 50 here, we got another leg down and went back into negative territory. Turned up here, and it remained negative. NASDAQ, again, saw those move into positive territory, but still rolled over, still into new lows. So do we get something like that here? We did get the bullish cross of the MACD, and it is now in positive territory. It'd have to stay there in order for this move to continue. And if it starts rolling over at the center line, it means we're either going sideways or we're going to go down further, one or the other. So watch the 50 period moving average. If we lose the 50 period before the weekends and lose the 10-week moving average in the weekly time frame, close below the 10-week, you close below the 50, then again, the sellers are lurking there. S&P never had a divergence form at this low over here. We still may end up seeing that happen before all is said and done, like the low over here and the divergences that gave us a sell-off here, or even the divergence here that marked the peak in July. So those are the Fibonacci's. Should we get a bigger sell-off? And again, I'm watching the trend line closely. Are we going to come back? We bounced off the trend line after hitting the 20-week moving average. I drew a trend line here before we ever reached it because I was expecting this gap to be filled, as I talked about as we were declining the 50-period moving average. So again, I'll be watching this trend line. Do we bounce off of it, fill the gaps, and try to form a bottom? Or do we come back and break the trend line and get a bigger dump and take out this low right here and get a lower high, lower low, and get a bigger decline? So here's what happened. Yesterday, we gapped higher, and we ended up forming a divergence here on the 5-minute chart, and then we turned back down to fill the gap, kind of back up, and we got the doji right there at the gap fill and our 78.6 Fibonacci. Today, we gapped lower. We hit the 200 here on the 5-minute chart, got a spinning top candlestick, rebounded back up to fill the gap. We filled the gap, got a lower high, turned down, got back above the 50, got back above the cloud, filled the gap, and then turned back down and bounced off the 200 again. And back up, went back up to fill the gap again, and slammed right into this trend line right here from the previous day's close and from the gap fill, the first gap fill attempt there. And then we hit that trend line and we stalled there, and that has formed a triangle. A triangle can be a continuation or a reversal pattern. So again, I'm watching the triangle. We've got the 50 just above the 200. If we start losing this area tomorrow, or if we gap lower at the open, we lose this area, then again, watching today's low. If the triangle gets a downward resolution, we'll take out the moving averages and the 50 will cross the 200. If we get an upward resolution, you can see a divergence develop on the 60-minute chart, things like the RSI and the MACD momentum. That's what happened today. We're in this kind of a narrow trading range. So again, a bullish push higher, it's a little higher, a push down below the trend line and the 200 period in the cloud. Again, takes us back to test this low. If we hold below the 200, that would be bearish. If we start dropping below the 200, then it could mark this as a top. If we bounce here off of the 200, then again, it may not be done, and you may get that divergence on the 60-minute chart of the S&P. Now, let me just bring up the RSI on the 60-minute chart as well. Again, it might be that a divergence develops here, and we push up, clearly above this area. We just moved a fraction above the gap fill here, about a point, hitting the 5200 area, turning down. It's still, if the triangle has a break to the upside, then we still may see something like that, but not be able to up the high. Or again, if we start losing, the triangle breaks down, we start losing the 200 on the 5-minute chart, losing the cloud here on the 60-minute chart, the momentum cloud, then again, got to take out that 200 here, got to take out the 50 period on the daily, and close below the 10-week moving average I talked about at the beginning of the week. Close above the 50-day moving average and the 10-week by the end of this week. Get rejection at those levels. But again, will a divergence develop here? We start turning and get a bigger sell-off. Here we got a lower high, and eventually it turned into a larger divergence, and that could be the case as well, even if we turn down. But you got a triangle that can be a continuation or reversal pattern. Same thing here at the MACD. Again, does it start turning down, or do we turn back up and form a divergence? I don't know if this means anything or not, but on the 60-minute chart of the S&P, we completed a 9-9 count. We kind of went sideways, and then we completed a trend extension with a 13. Sometimes the counts play out. You can get pullback with a count and then a trend extension. You can get a reversal with the count, with the 13 count, or we could get an immediate trend extension. That's possible, but it is something here showing price exhaustion, something I thought I'd show you. We got that in the latter part of the session there. We completed that 13 count. So again, I'll be watching to see what becomes of that. If you get these counts, you go a little higher and then you turn. Other times you turn immediately. If you get some kind of turn, the question is, will it be a reversal or a pullback? If we do get a turn, still the possibility of an immediate trend extension. Some of these other counts marked short-term tops and bottoms here. Keep in mind, this is the, I had a cough there, this is a 60-minute chart. Something worth paying attention to. NASDAQ 100 was down 6.5 points, pretty much flat. 50 is coming up to the 200 here. Again, you still have this trend line acting as resistance so far, but I talked about, again, do we get a divergence forming? Do we get a divergence that forms or start moving into the negative region here and start moving and getting a bigger drop down, taking out the 200 period moving average here on the 60-minute chart for NASDAQ. Now, again, these peaks and this low, they've marked tops and bottoms, but again, divergences can develop as well. So again, I'll be watching, and if we do go higher on NASDAQ, I'll be watching this trend line right here. Right here is gap resistance. Let me draw that straighter, which we stalled just underneath it. If we clear gap resistance, you still have this gap up here. So again, just some levels to be watching. If we try to a trend extension, again, I talked about NASDAQ bouncing off this trend line. We hit this trend line a couple times on the pullbacks here, and then we got back up above the moving averages and above the 50 here this week, and now we're stalling at this trend line, at least so far. Again, just like the S&P, the upper boundary of the cloud. So again, do we find rejection at the upper boundary of the cloud? Do these levels hold if we go back and fill the gaps? Do we establish a bottom? Or do we start breaking these levels and start taking out this low and end up getting a lower high and a lower low? Does the RSI end up turning back down and we see a divergence before all is said and done, start moving back towards the 200 or something uglier towards the 400 period moving average on NASDAQ? Thing here on the MACD. Again, MACD got a bullish cross. It turned up. It's in positive territory. That was the same thing over here and the same thing over here after the July peak. Let me just go a little bit further back so you can see it after the July peak, but that didn't stop. That didn't stop new lows from happening. The rollover went back into negative territory, and then again here, the rollover, overthrowing that 50 a couple times like what we're doing right now, still ended up getting new lows, a series of lower highs and lower lows. It was choppy downward trend, but it did grind lower and we did make new lows. So I'll be watching, does something like that happen here and we come back, take the trend line out, take this level out, or do we try to establish a post-Fed bottom? As I've talked about, I'm looking to see if we get a trend extension with the Fed, because the Fed meetings have been calling the turns, or a bottom, a post-Fed bottom. And if we get the trend extension, then again, these levels, 200 and the 400 period, come into play. The 10 and 20 below the 50 period moving average, so the moving averages are still in a bearish arrangement. Back over here, they were tangling back and forth as well. Same thing, really kind of going sideways there, and then the drop, and then a bit more of a sideways move here, lower high, lower low, as we got another drop. So the moving averages were tangled. Now, sideways for 7 weeks on the NASDAQ. It gave the illusion that we were continuing to go higher, and complacency set in, just as it is right now, rallying back up towards our Fibonacci retracements, our 78.6 Fibonacci. We had these divergences set up, played out. We got an 8% decline, over an 8% decline on NASDAQ. I talked about these divergences at great length and detail, and again, we had them all over the place. They're still present, but oftentimes you get a bearish cross, and as what happens is sometimes you get a powerful rally back up, but then it resumes and the bearish cross remains. Other things can take place. Let me just zoom out here. The NASDAQ very well could try to establish a bottom, and again, it may pull back, and then we still may try to form a divergence in this most recent price action if we can establish this as a bottom, as I talked about nearly 3 weeks ago when we hit that level. But even though we're rallying back up, these signals remain bearish. So again, the rally is going to either fail, give us a pullback, and establish a bottom, fill the gaps, and everything will turn back to bullish, or we're going to resume the decline towards the 50, the 200 in the daily, the 50-week here, and this trend line right here. And that very well could be the case, that we get another leg down and hit that and test this level before all is said and done. Possible measured moves. If this trend line breaks, then we get something even bigger if we take out the trend line and the 50-week moving average. But these oscillators are still at this time with the rally. So the selling pressure can continue if we drop back below the 50-day moving average and drop back below the 10-week moving average weekly time frame.